Many are speculating that today's pullback in the Dow Jones Industrial Average and the US markets overnight have something to do with the Chinese property market. So, for those following financial markets, you would have seen the Dow Jones drop by 614 points and 1.8% overnight, which is really needs to be put into perspective, given the amount of rise that has happened in the last, say, 1 year. Then if we just go to 5 years, just to see that the COVID collapse, let's call it, when many, and yours truly also, believed that there was going to be the second dip going down that way. The market continued to go up and up and up to the new all-time highs. And every time something like this happens, many are speculating that this is the beginning of the big one, the next one, leg down. I don't know if that's the case. Even if I had an opinion, why would it matter? But let's see what this Evergrande crisis is all about. This is only about 2 or 3 hours old news article. However, the Evergrande collapse has been reported a few days ago. So China's real estate house of cards could be brought down by Evergrande, the world's most indebted company. Now we know that China and Chinese people are the most indebted people and or country in the world, but that hasn't stopped them booming in the last 10, 20 years, exporting their capital, buying land, farms, farmland, real estate, everything, you name it. It's kept, in my opinion, Australian economy afloat by them buying all the iron ore, coal, all other resources. Everything else has really been getting and making this economy continue to grow, in my opinion, up until the March 2020. It was Chinese tourism as well. So, there's plenty of Chinese money just pouring into the economies around the world. And before I read you this article, let's have a look at this. Right. Apparently this is what's going on right now, which just happened in China in the recent time. Let's have a look at the other one. There's more. All right. Let's just be careful from these headlines. We have to understand that mainstream media will hype everything up to the upside, to the downside. So, what is really going on? I mean, these storylines and these images were in the news 10, even 20 years ago. Everyone's been talking about this imminent China property market collapse, which would therefore collapse the rest of the markets and the financial system. So what they're calling this Evergrande debacle is the next Lehman Brothers. But let's get into the actual detail. I'll post the link of this article, but it's from ABC News. ABC stands for Australian Broadcasting Corporation. So anyone who thinks that this is owned by the government and the government somehow isn't a corporation, and every government around the world isn't a corporation, needs to look into this. That's another topic though. They are all corporations actually registered in the registered with the Securities and Exchange Commission, SEC, in the United States. Again, that's another topic. So let's see what this article says. It was once a darling of China's booming property sector, expanding into football teams, instant formula, and electric cars. Now Chinese property giant Evergrande is being picked over by outside advisors who are trying to untangle more than 400 billion of debt. one of the nation's largest real estate developers. The company claims to own more than 1,300 projects in more than 280 cities in China and is forerunner in delivering all houses with fine decoration, whatever that means. And until this year, Chinese property was booming. Demand for real estate in megacities Beijing, Shanghai, Shenzhen, and Guangzhou drove prices to among the most expensive in the world. Evergrande took out loan after loan to meet demand, but then came falling property prices in smaller cities and a series of government measures aimed to cracking down on excessive borrowing in the real estate sector. Again, the government has tried to do this before, but nothing has stopped the property market march forward. And our dear economists say the potential collapse of the company could be the biggest test that China's financial system has faced in years. In its wake, thousands of Evergrande investors, suppliers and employees of the sinking company are hoping the government steps in to help them get their money back. So far, Beijing continues to hold a firm line against such a decision. Beijing draws a third red line, or three red lines. Evergrande's woes began when Beijing slapped strict rules on the Chinese real estate industry last August. Known as the three red lines, the rules were aimed at reining in debt and making real estate more affordable for the average Chinese family. Of course, that sounds reasonable. It forced the company to offer increasingly steep discounts on properties to keep cash flowing. Mark Williams, Capital Economics chief Asia economist, said in a note. Now Evergrande is reportedly unable to make its loans interest repayments. So far, China's leadership in Beijing appears reluctant to bail the company out, leaving thousands in the lurch and some financially ruined. I'm devastated, one employee told the ABC outside Evergrande's Shenzhen headquarters this past week. Our company is pretty much going under. There's no way it can keep operating. They owe us more than $1 million, the woman said before Evergrande security guard stopped the interview. Well, she's lucky. Another group demanding payment are thousands of businesses, suppliers who have sold Evergrande everything from painting services to pipes to cement. I'm worried I won't ever get my money back, so I'm here to see if the management will start a dialogue with us, said 62-year-old Zheng Jijun, a businessman from China's eastern city of Wuxi. He has been waiting about 6 months for payment of $5 million. Another supplier flew from Shanghai seeking payment of $2 million. Evergrande says it will use its property as collateral for the payments they owe us, but it's commercial and junk property that the company can't sell, so we won't be able to sell it either, she said. Good point. We need money to pay off our creditors and banks. Without cash, we're as good as dead. Alright, now we're getting to the point of is this the China's Lehman Brothers moment? For those not across the financial markets, back in 2008, Lehman Brothers were the first financial company that declared bankruptcy, which set off the domino effect and created the 2008 great financial crisis, or global financial crisis as some call it. So as Evergrande was mounted, some commentators compared the property conglomerate to Lehman Brothers. The massive financial services firm filed for bankruptcy in late 2008 in the most dramatic collapse of the global financial crisis. Now, the thing is that sometimes you'll have things collapse and not cause the global financial crisis, where the Lehman Brothers did. So everybody's kind of holding on to this Lehman Brothers example, as this Evergrande can be the new Lehman Brothers. Time will only tell. It's a big one, but we've heard and seen issues from China before. They haven't always caused or haven't yet caused any issues in the global financial markets, but will this one be it? Only time will tell. maybe this is just how business is done in China, and this is kind of the testament to it. Experts have warned of broader contagion if other heavily indebted property developers also start to miss payments like Evergrande. Unfinished construction projects are a relatively common sight in some Chinese cities due to smaller developers going bust. So again, it might be just the way that China does business. This is a very large developer, however, this is the way business is done in China. So they might just cruise out of it easily. Last month, authorities in southwestern city of Kunming blew up 15 unfinished apartment blocks in a spectacular controlled demolition. A similar demolition took place in Shanghai in April for a set of buildings that remained unfinished for 20 years. Such spectacles, along with an estimate of more than 65 million empty apartments across the country, has long fueled speculation of a looming collapse in China's property sector. As I was reading this just then, I'm thinking 65 million empty apartments, if there's only, on average, 2 people living in them, not a family, just 2 people as a couple, which is reasonable to expect, and a very conservative, that's like 130 million people. I mean, this is like the whole country. This is more than Japan. This is like Germany, probably France put together. It's like crazy. The whole countries can be housed in an empty apartments that China has at the moment. This is interesting from Bloomberg Market's latest Hong Kong property stocks see the biggest sell-off in more than a year as Evergrande woes spread. The Hang Seng Property Index fell by 5.9%. Again, you know, we need to see historical data. It's probably gone up, straight up for years and years and years, and then now it has this correction. Again, will this be the beginning of something substantial? And we all like to read into these things as if that explains the normal ebbs and flows of the market, like me showing you what happened in a day overnight in Dow Jones, 5 days, nothing ominous really looking there. 1 month, yeah, that looks scary-ish. 6 months, look at that, we're still up in the 6 months. 1 year, okay, and the 5 year, that kind of shows us what happened there in early 2020, and the markets just took off and kept going. This does look like a topping pattern, and it wouldn't be surprising if it pulls back. By how much, I don't know. I have no idea. I mean, with what they're doing with the Delta strain and all the other conspiracies that we're not going to talk about now, it wouldn't be surprising that, like anything, we just give any number, it's like, 30%, that would be good, that would be a buying opportunity. Of course it would be. 30% off the price of anything. A shirt in a shop is a pretty good deal. 10%, sure. 50%, 60%, I don't know. I just don't know. But I think, I'll tell you what I think in my next video as far as the properties, but it may be surprising given what I've said in the past about the property market. With that, we've gone close to over 10 minutes, close to 15, so we'll wrap it up for this video. Thanks for watching, and chat soon.